David Burrows is our guest. He's the president and chief investment strategist at Barometer. We're talking about North American large caps at 1-855-326-6266. We're also on email, market call at bnn.ca, and on Twitter too. That's how Steady Steve got a hold of you today, asking what you think of Diageo.
Okay, so Steve, we really like the beverage companies. We think that you probably see very good dividend growth going forward. The market is putting a premium on companies that have a sustained ability to pay. Mm-hmm. They're also putting a premium on companies that have a call on the global consumer, and Diageo has both. So this is a company I would buy at these prices, very consistent performer, and they have very strong emerging markets exposure.
52-week high, already up 26% over the course of the last year. How much more upside could you see?
Look, when you're in a bull market, buy what's working. Okay, as long as you can find things that are, as I said, good, getting better, you can get both multiple expansion, earnings multiple expansion, plus in this case you get dividend growth. I think it's quite attractive.
And the technicals are looking pretty strong too. Thanks for the tweet, and we're off to the mailbox now and the phone lines. Chris in Toronto, thanks for holding. Welcome to Market Call.
Hi, J.C. Penney is having obvious problems. We rallied today with the CEO's search announcement, but from your comments today, I think J.C. Morgan's a safer bet.
Certainly, J.P. Morgan is a safer bet. And listen, I really like retail and consumer discretionary in the U.S. J.C. Penney is an outlier to the downside. If you just want to get exposure, look at the ETF XRT. One of the stronger performing ETFs so far in the year, and it gives you a basket of retailers and performing better than 80% of the stocks in the S&P 500.
The XRT is the U.S. listed play. I'm looking here at Super Value, GameStop, TripAdvisor, Penske. They're all about 1.2% weighting. So there's no one player that overwhelms. It's not a
big market cap weighted basket. It's a broad basket. The other one that's quite interesting, just to throw out there, is the internet retailers. And they're winning across the board. FDN is one that we own in our ETF portfolio. And you know, ETFs are an interesting way to go because they take out business risk and just gives you sector exposure, and that's what we execute in our ETF portfolio.
And that one there, as we look at it here, has Google as the most influential player, 9.1% weighting, Amazon, eBay, Priceline, Facebook as the top 5. All right. Chris, thanks for that. We go from Toronto now back to West Vancouver. Gus, hello.
Good morning.
Good morning to you.
Good afternoon.
What's your question, sir?
I have a question for David with regard to ARC Resources. I've had it for 2 or 3 months now, and every day it seems to have gone down. I've lost about 7%. And I'm wondering whether I should get out now or tough it out.
Well, it's a question we've been asking ourselves over the last few days. We sold the last of our stock this morning. Again, you know, the gas producers, and this is a great company with great assets, but as you can see, technically the stock's breaking down here. I think you want to be cautious. It's just coming through the 200-day moving average to the downside. This is one where I don't think you want to fight the sector.
Okay. Gus, thanks for that. We'll go from West Vancouver back to the commercial break with David Burrows. He's the president and chief investment strategist at Barometer Capital Management. We're talking about North American large caps. If you'd like to join us, you can call us at 1-855-326-6266. We'll talk about U.S. financials again when we return after this short break.